Hello all. Once again, thank you for joining in today's session. My name is Vikram and I handle marketing for Payoneer in India. Really excited to have you in today's session. Payoneer Pathshala is our effort to help cross-border companies, especially services companies, in helping them and clarifying many of the doubts that they come up with. In today's session, we'll be emphasizing more on GST compliance issues that many of the services and specifically cross-border companies have come up with. Happy to have Mr. Prasad, Chief Knowledge Officer from Anpal in today's session. And he'll be taking us through a detailed discussion on GST compliance for cross-border companies. We'll be talking on different aspects of GST compliance, including GST in export for services, GST refunds, Forex accounting, revenue recognition, and international taxation in today's session. Before I hand over the mic to Mr. Prasad, would request all of you to, if you would have any questions while Mr. Prasad would be presenting, please share in your question and answers in the Q&A section, and we'll take in whenever we get time in between or at the end of the session. So over to you, Mr. Prasad.
Hello, good afternoon, everyone. And thanks, Vikram and the Payoneer for introducing me with this. It's a great opportunity to explore the GST and the compliance and the related matters. I'm just sharing my presentations. So the points we are going to discuss today is a part of the GST, how to deal with the GST in case of an export of services, the accounting related part of it, because it is very much important part for the business, because how you present in account would reflect into a GST and would reflect into your balance sheet as well. And then the third part in a detail we'll going to cover is a modern way of the business, that is like an equity offers from your client to you, or the international transactions you are looking for, having your own company in abroad or abroad company looking to tap with you. So these are the current discussions that we will take forward in our current sessions. So let's begin with the GST compliance part of it. Then when you are associated with the cross border of the business, which are the important aspect from the GST that you should take care of it, right? So GST when introduced, it is nothing but some part of this, the replica of the service tax than with what we did it. So they have introduced GST in a phased manner. In a service tax, they have first introduced the place of provision rules. With that, they have introduced the export services, and thereby in a step-by-step manner, the GST laws comes into place in the 2017, right? So GST says that when we treat the service as an export, there are various scenarios like Mr. A of Bangalore, Mr. B of Bombay. Mr. B of Bombay is getting subcontracting services from USA person, right? And you are delivering that services to USA person, but you are getting the remuneration from Mr. B of Bombay, right? So these are the one aspect that you encounter when it is outsourced to you. Another point is when you are directly dealing with your client sitting abroad, right? So these are the various business scenarios that have to be we take into account to decide about whether the service we provide is export or not. So let's understand what is the important aspect of the export of the services. Is first, the service provider should be located in India. Obviously, if you are not located in India, then the provider is not located in India, then in that case, GST Act would not be applicable. So it is a foremost condition that the person who actually provide the service should be located in India, right? Then the third point is service recipient should be located out of India. Now, what happened in our case for the service being an intangible person, right? In a goods, we have an export bill, we have a service shipping bill of export is there, bill of entry filing is there, and it is a physical, tangible. So we can feel that the goods has been exported out of India. But in case of services, that is in various cases, it is how to prove that the service recipient is located out of India as well. So now taking an example, A of Bangalore is providing a services to USA client, having his office into B of Bombay as well, right? So this is the cases, various scenario comes to us to decide about. So the service recipient should be located out of India. So provider must be in India, and the location of the recipient should be out of India, so as to establish that it's a cross-border transactions. and the place of supplies should be out of India. Now, this is very much important to decide. As I mentioned in the last example, A of Bangalore providing services to US client having his office in Bombay, right? So here in this case, you are providing services, you are based out in India, the first condition gets satisfied. Your client is service recipient is based out of the India, that is located in US, that service also gets satisfied, right? But you are providing service to his branch office in Bombay, right? So here we have to decide, okay, what would be the place of services. That is a place of services where actually you have provided services. You have provided services to Bombay, his branch, or you have provided services to your US client, right? So place of supply is very, very much important point to decide the taxability for the export of the services and to get the many benefit of the export of the services. In the next slide, we will also go through the points which helps us to decide about the place of provisions. Payment received in Forex, because the Forex reserve is very much important for any country, right? So why the government is giving benefit for export, that is just to point that the government will earn the Forex. So it is must that whatever the consideration you have received, it should be received in the Forex currency and not in Indian currency, except it is permitted by RBI in a specific notifications, right? So the condition is very much clear. Now here some transactions happen, like for an example, we during our practice field, we come across the scenarios like a person has provided a services to US client, right? US clients wired him or either pay through the Payoneer type channels in a foreign currency, which is get converted into a INR, and we will get into our bank accounts. We receive the BRC as well for that. Now, sometimes we come across the scenarios that the client directly advised to its bank in USA to give us money in INR. So in that case, the conversion was not happened and we'll receive the funds in INR, right? Because our Indian bank has not received the funds in the Forex currency. But say for a JP Morgan of the US company advise, the US company advised the Chase to just give the INR of 1 lakh rupees equivalent to a dollar amount, right? And that we will receive directly through a Chase in our banks of 1 lakh INR. Right? So these are the cases. So, but here the condition is that the payment should have received in Forex. The Forex currency must there in the conditions, and it should not be merely an establishment of distinct person. This is very much important point to understand, that what it means to say that it is not merely an establishment of distinct person means it is not merely a branch to branch transactions. It is between two separate transactions between two separate person, right? So if say for an example, A is having his own branch company in a foreign, right? Its company is a different thing, but its own branch is there. Then in that case, it would not be treated as an export of services, right? So this will not be treated as an export of services. Kindly note this. This is very much important to understand here. So A is having his own branch office in USA, and A provider services to his branch office in USA would not be treated as an export of services, because he is providing a services to same person, not to a distinct person, right? So this is these are the 5 conditions to decide whether your service is an export of services in actual terms or not. So first is the provider is located in India. Second one is the recipient should be located out of India. Third one is your place of provisions. The supply of service should be out of India. Forex currency receipt is must there, and it should not be distinct persons. So I have given the example. A Limited of India provides services to B Incorporations, B Inc of USA, and the consideration received in Forex. Let's examine each and every conditions. So the provider is A. It is located within the India. The condition 1 gets satisfied, right? Now service recipient should be located out of India. Here the B Inc is located also out of India. So USA, the second condition is also satisfied. The consideration received in Forex. So the fourth condition is also satisfied, right? And A and B are not a distinct person, because these two are a separate entity, altogether are different persons and not an unrelated persons. So all the services, all the conditions to decide about the export services are satisfied over here, means that the person has provided services out of India and it is an export of India. Now let's get to the point 3, when we can treat that the place of supply is out of India, when we can consider that part. So this has a reference in the GST in a section 13, which mentioned that, which helps us to decide the place of supply, whether it is in India or out of India. So mainly the KPOs companies or IT or BPOs companies are into mainly a 3 stream of the services. One is the data access and information services. They may provide the dedicated resources as well, and the development and consulting services like the KPO and BPO services. These are the main 3 stream of the revenue. Generally, the companies are engaged with the clients. Now here, in this case, in our previous example, the place of supply would be out of India, because the concern says that the place where the recipient is located. If this service you have provided, right, then what would be your place of supply? Where your recipient is located, right? So now just taking you to the back side, last slide. So where your recipient in our case is a B in corporations. He is located at USA. So in this case, my place of supply would be USA, which is out of India, and hence my all the 5 conditions get satisfied. So this would be treated as an export of services. Now, just I have mentioned one another example in last explanations. A of Bangalore providing a services to a USA company having his branch in Bombay, right? Now you are developing something for his branch office in Bombay, but your agreement is with USA company. Now let's decide how we will treat as a place of supply, right? You are based out in India, correct? The A is in Bangalore, it is a provider is based out in India, right? Now recipient, where actually your receipt of service has been consumed, that is in Bombay, right? Though you are receiving the funds from USA company or Bombay company, it would be treated as a part of the service recipient would be in India, right? So there are various case studies is also available. If you have any concern, we'll take into the FAQ part of it, right? So there are many case instances based on the modern trade or these current business scenarios we will come across, and it's in a case-to-case basis that one has to decide on a part of it. So data access and information, dedicated resources, and development and consulting services. These are the mainstream. In that we have to decide about where the person who received the service is located. If it is located out of India, then it will be treated that the place of supply would be out of India. Now, two conditions one has to take into a consideration. First, however, any services between the establishment of distinct person shall not be treated as an export of services. The place of supply of services, we were on the last point of it. I'll just repeating on part of the last which I have mentioned is, what is your place of supply? Where the recipient is located, to whom you have provided a services, where he is located, that would be your place of supply. And if it is out of India, you will be eligible for the export of service benefit of it. Now, two important points that we should take into account is one, that the transactions of the export of service would not be between the distinct person, right? So it is transactions should be between the unrelated parties. Say A is having a branch in USA and providing the services to USA, then it would not be treated as a part of the export of services. The second point, which during my practice terms we come across in many cases where the companies have not complied with these laws and they were ending up paying the either non-payment interest for the non-payment of GST and other things, that is a reverse charge mechanism. So also, if any case, if the services are consumed by Indian entity, then it will be liable for IGST under the reverse charge mechanism. So this would be a part of import of services. What happened, we generally take the subscriptions of the many softwares, right? And they are based out of the software provider are based out of the India. But we are paying them either through our credit card, which is auto debit basis, and the payment is in INR, payment is in USD, but deducted in INR. So in some of the cases, we have to pay reverse charge mechanism GST under the IGST, but that we missed it out, and here we were ending up paying the interest or late payment charges for the RCM. right? So this is the first when you provide a services, it is a forward charge. But when you pay a GST as a recipient of services, it is a reverse charge mechanism. Here, the recipient is required to pay the taxes over here. So kindly note that. Just check it with your the teams whether you are not missing out on paying up the GST under the reverse charge mechanism for any foreign services you have consumed or any subscriptions if it is applicable in that cases.
Mr. Prasad, we have some questions possibly before we move forward. I'll take some of those questions. The
Yes,
first
please.
question was from Tanmay. I think he has in a content agency and he's saying he's a writer with international subscribers. In his case, would the place of supply be considered because his subscribers are based out of India? Would there be this condition that you have mentioned would be applicable to him?
Yeah, so if your client is based out of India and you are providing a content services, right? Then you are based out in India. Your client is based out of India. You are providing services to a client based out of India. Then yes, it would be an export of services.
Thank you. And the next question is on the SEIS export incentives. If there is a latest news on SEIS export incentive, is that restarting or being replaced by another scheme?
Actually, during the COVID, they have extended the scheme by the September and by the March as well. But still, government will definitely going to restart that scheme. They are thinking on some part of it. MEIS part, they have just now started working on that part of it. So we expect that they will also look into the matter of SEIS scheme too.
Sure, and possibly I'll take one more question before we move forward. One of our attendees, they are saying that they have a virtual entity in Singapore and their clients are in US and development happens in India. If the bill with my Singapore entity will be applicable under GST.
So here we have to check the fact whether it's a virtual entity is a registered company there in the Singapore or it's merely just a virtual office that the people are currently taking on. That is the fact has to check out on this point. So if you have established your own subsidiary company or your own company into a Singapore, and if you are doing a billing from Singapore to US, then yes, the transaction would be pure outview of the GST. Right, and the concern is how you raise the invoices for your expenses for the Indian company from Indian company to Singapore company, that we have to check with this.
Sure, and possibly one more question, one final question that I'll take is, how is supply between distinct person treated, whether IGST is payable in such a case?
So here, yes, very nice questions. In this case, the CGST and SGST would be payable, right? Because you are providing to the services to the same person, so would not be treated as an intrastate transactions as well.
Sure, sir. There are other questions also. I'll take it, but we should move ahead, I guess.
Oh, perfect. So the export of services, then we have an idea about the place of services. Now, how the GST would be levied in case of your service is qualified for the export of services, right? And what would be the process for the refund that we will go through this slide. So as I mentioned that in export of services, government says that the payment should be in the Forex because every country wants the Forex reserve with them. So this will add a value to the countries as well, right? So government says that when you are exporting any services or a goods, you have two options. One is you can export the service without charging the GST. Second one is you can charge the IGST on that part of it, which you can pay utilizing your available credit and then claim for the refunds. When GST was introduced, the scheme was LUT was there, but it was very strict. So if you have a certain turnover limit, then you would be eligible for LUT, right? Later on, government find that the IT companies are facing the issues, and IT companies and the export of the goods are the mainstream revenue for the Forex receipt. So they have amended the law that any persons can take an LUT. So, and no bond is required to be furnished at that time now as well. So you have to just apply on the GST portal for your letter of undertaking. Letter of undertaking is that if your service would not qualify as an export of services, you will going to discharge the GST liability, which is to be paid if it was not has been exported. So the first transactions, let's understand how you would be treating when you export the services without charging GST in your invoices. So my agreement with my client is around $10,000, right? I will raise the $10,000 invoices without charging IGST. I will show in my GSTR1 as an export of services. Now, as mentioned in the condition that payment should be received in Forex, right? So how you would prove that your payment is received in Forex? Then in that case, if it is a wire transfer, you will receive the BRC from the bank. If you are receiving it through the Payoneer have a very good system in the portal inbuilt where you can find your BRC directly, right? So this BRC contains the dollar remitted by your foreign clients with the conversion rate and with the bank charges on that part of it. So this would be a proof for you that you have exported out of India and the payment has been remitted in the Forex currency. So in this case, you are not discharging your GST liability, but as against whatever the services you consumed within India, you are paying GST on that part. Like you buy the computers, you buy the printers, you buy many IT items or peripherals, and on which you are discharging, on which you are on that bill you are paying GST, which is your input credit. As you are not paying out GST, you are not utilizing input credit, so that gets accumulated, which block your working capital part of it to the extent of 18%. Say for an example, there may be a cases that whatever the services you provide to your client, you have outsourced to some Indian person as well on a freelancing basis, on which you will receive the invoice with the GST. So this all input GST get accumulated with you, which you are not utilizing for the payment of tax. Then government will allow you to a refund of your accumulated credit, which you have not utilized it. So this is in the first case, when you don't charge a GST, then in that case, you can claim the refund of your unutilized input credit, right? Simply, the process is totally online. You just have to file the refund applications. This is also online. You have to upload the invoices which you have raised for the export, which should be matching with your GSTR1 as well. Ensure that. Also, you have to attach the BRC that you have received on account of that Forex services, right? Once you do it, system is totally automated system right now. Previously, it was not there, but since 20, it started working totally online. And if it is proven and seems to the officers to be okay, refund would be granted to your accounts directly. You have to mention the I suggest to mention the invoice wise mapping for your BRC as well. Just prepare an Excel sheet where you mention the invoice number, the client who remitted, and the copy of the BRC and amount you have received it. So this will be helpful to the officer to reconciliation as well, right? If the officer is not satisfied or if you have a concern, he will share a notice with you and you have to reply accordingly on that part of it, right? Now, in that case, what would be the maximum refund you can claim? So I have, say for an example, I have an accumulated credit of 10 lakhs rupees, right? So how much maximum refund I can get it? So government says that the refund is allowed only out of the service you utilize for the export. Now there is a possibility that I am providing the services in India as well as to the out of the India as well. Then in that case, proportionate credit would be allowed to me based on my turnover. So here we have mentioned the refund formula. That is a total turnover of zero rated supply into net ITC. That is an input credit available with you on buying of your stuffs or buying of your services. Divided by adjusted turnover. What does mean an adjusted turnover is a total sales minus exempt sales. So please mind that exempt sales word. Here in this case, we are exporting a services without charging GST. Doesn't mean that it is exempt services. It is the zero rated services. So there is a rate of 0% is there, right? So people are misguided over here. in many cases, we come across the situation when after the year end, people comes to us with the Forex receipt and says that, okay, sir, this is an exempt services. So we have not charged the GST and we have not taken the GST number. This is completely wrong myth, right? This is not an exempted services. It is a zero rated services. And in case of export of services, you are required to get the registrations at very first rupee, right? Interstate transactions, because it is treated as an IGST transactions and you are required to get registered yourself. So exempted services means a specific services which is government has nominated as an exempted services. So this you are required to accelerate, means you have to consider only a taxable turnover of your business, right? Let's take an example in the next slide. Say example, my service supplied within India is a 50 lakhs rupees. I have provided services out of India to a 1.5 CR. And against that, I have paid a 10 lakhs rupees of credit for buying my stuff and all that things. So here in this case, my total turnover would be a 2 CR and my tax credit is 10 lakhs rupees. So my 75% turnover is toward the export. So out of the input credit, I can take the 75% as a credit, that is 7,50,000 rupees. So government can remit me a 7,50,000 rupees to my accounts. This will help in the management of my working cash flow. Now let's see what if you charge the GST in your invoice part. So repeating the previous example, I have an agreement with my client for 10,000 USD. I will charge 18% GST, that is 1,800 rupees, $11,800. I have raised the invoices. As against $11,800, I will going to receive only and only 10,000 from my customers, right? So $1,800 is will still showing as a recipient from my, as a receivable from my client, but this is not the receivable from my client. Actually, this is the liability which I have to discharge it by utilizing my existing credits. So whatever the credits available with me, right, on buying my stuffs, on buying my input services, right, that I can utilize for paying this 1,800 USD dollar as a GST. Say for an example, that amounts comes to around 80,000 rupees for GST being of 1,800 USD. And I have a credit of rupees 2 lakhs lying with me for the outsourced services or for the computer I have bought out or for any other things. So I will utilize this 2 lakhs rupees to pay out the 80,000 rupees in my return. And then my net credit would be 1,20,000 lying with me. So here the 80,000 is not my actual cash outflow. It is what credit I am utilizing over here, right? And in that case, I can claim the refund of 80,000 which I have utilized to make the payment of IGST. Right? So these are the two cases. One is with the payment of GST, second is without payment of the GST. And yes, there is a time limit within which you have to make an applications, that is within 2 years from the date of the receipt of their Forex. So within a 2 years from receipt of your BRC, you can apply for it. And in case of advance receipt, within 2 years from the issuance of the invoices, because we in IT industries, we have a close of the advance receipt as well. So this is whole scenario about the levying of GST and the refund of GST.
I think there are a lot of questions coming in. I'll possibly, one theme of questions that we are getting is with regards to GST for freelancers. I'll possibly take one question which summarizes a lot of other questions. The question is from Aftab, and he asks, can you please talk about applicability of GST on freelancer working through Upwork? For example, I'm working for clients in US, Canada, and many other countries through Upwork contracts. I bill in USD through Upwork, receiving funds in Upwork escrow account in USD, then withdrawing funds to my bank in INR. In between, Upwork deducts tax at source and provide TDS certificate. Is the above scenario and services shall be considered as export of services and are all conditions satisfied?
Correct. So this is the Upwork is working as an aggregator of the services where you are providing the services to Upwork. And actually in this case, you are not providing services to Upwork, you are providing services through Upwork, right? So here your recipient of service is not the Upwork. Upwork is merely working as an aggregator part of it. So you are providing a services to a customer based out of the India, and in that case, it would be treated as an export of services, because Upwork is an like e-commerce aggregator platform of the freelancers, where you are getting the register. We are having a client for the Upwork as well, and the scenario which I have mentioned, that he comes to me saying that we are providing the services to a US client and it is an exempted. So these were the cases of our client as well. So guys, here it is liable to be an export, and you are required to get yourself registered as a GST. This is what my suggestion is. You should take it, because you are not providing services to Upwork, but you are providing services through Upwork. So that makes a difference.
I'll take one more question, Prasad. The question is, my US client paid me through a foreign bank, PacWest. I don't have an FIRC and my bank statement shows NEFT transactions from Standard Chartered. Whom should I ask this FIRC from?
So here in this case, the example of Chase which I have given is useful to you. Ask your client that he might have advised the Standard Chartered Bank of his US or his country to pay you in INR, right? Just take the FIRC or an advice from the Standard Chartered Bank of that country who has given an advice to your Standard Chartered Bank of India, and take a certified copy with the stamp. Don't take a digital copy of it, and just represent it with the department. Possible that your claim will be accepted.
Sure. I think there's one follow-up question on the last question, Prasad. And the question is, Upwork also provides contractor services on its platform on hourly basis. And we are required to pay them via Upwork. We pay to Upwork for this service. So does GST under RCM is applicable in such a case?
No, in that case, whatever the invoice you received from the Upwork would be with the GST, I think so. So Upwork is registered with the GST. So there would not be a cases of export of services in that cases. Because
okay. One more question possibly which I'll take is, I'm selling through Fiverr, same as Upwork, but Fiverr has taken GST in India in all states. Do I have to pay GST in this case?
Just take a note that you are just first of all be sure whom you are providing services to, a Fiverr or to a customer based out on Asia, right? So if Fiverr is merely acting as an aggregator or a platform, then you are providing services through a Fiverr, right? You are not raising invoices to a Fiverr, you are raising invoices to your customer out of the India. Then it would be treated as an export. So the whom you raise the invoices and whom you provide the services is very much important, and not the through whom you provide the services.
Okay, possibly one more question before we move forward. Hemant asks, I've been working with Singapore company as an influencer management agency. I've received around 300,000 USD, more than what I'd made in last financial year. And I have not registered under GST yet. Is there any problem that I'll face in future?
So first of all, what would be your constitution? That is important. You are working as an individual proprietary concerns, or you are working as a company. That is the two things. Yes, if you are a proprietor, then based on your income tax return, because now both the department are synced on the single portal. So there may be a chances that you may get the explanation notice from the department side why you are not registered it. So it is advisable you should get yourself registered with this. Take a help of your consultant who help you to decide about it.
Got it. And possibly one last question, sorry, before there are so many questions coming in. One last question that Mr. Sarv Kumar is asking. I've been receiving funds from my client via wire transfer in USD to my Indian overseas bank account. The bank neither asked me purpose code nor provide FIRC. What should I do in this case?
So you should write a letter to the bank. Bank will definitely ask you to it, because there may be a possible that at the time of the remittance, the remitter have mentioned the purpose code of it, right? So if it is not mentioned, then in some cases the bank will also ask for the purpose code. So you just just drop a mail. You should have a writing proof with you that you approach to the bank for the FIRC. Bank will definitely have it with you.
Sure. I think there are other questions also, but let's move forward and we can take other questions.
Perfect. So guys, let's take in to accounting part of the export of services. many a time we found a very messy accountings when they comes to us for the auditing, and we generally do the auditing after 1.5 years when the year is completed, right? So we end up paying a very lot non-compliance penalty over here. So this is very much aspect, because whenever the GST department or any department asks what you present is your accounts, right, and how you present, that is very much important. So let's see, when you have to recognize the revenue, when you are required to raise the invoices. Now, many a time we come across the cases when the client, we have to receive the advance from the client, will raise the invoices. Actually, this should not be the cases. So there are two type of the agreement we may have with our clients. One is a milestone based delivery, and second one is a one-time services. Right. So in case of one-time services, when your service is complied with, you are required to raise the invoices. Say for an example, I have a one-time service for $10,000. As against that, I am asking 50% as an advance, that is being a $5,000. But and in that case, what I do is I am raising the invoices. But this is not the case for accounting. In this one-time delivery, my service gets completed, then and then I have to raise the invoice for $10,000. So here you are not required to raise the invoice for $5,000. You are required to raise the performa invoice. That is an advance receipt request, right? So don't do the invoicing for that 5,000 which you ask for the advance in case when you are having a delivery. Now, in case of the milestone, say 20% on advance, 30% on the milestone 1, 30% when we go live. These are the contract we have with our clients. In that case, you are required to raise the invoice when your milestone you have achieved it, right? So these are the cases when you have to raise the invoices. Now, what happened? And in the month of the March, I have asked for $5,000 or $10,000 as an advance receipt from my US-based client, for which I am going to provide the services in the month of the April. Right now, this $5,000 would be, if I have raised the invoice, would be included in my revenue part of it, on which I am going to pay a tax in the March 21, for which I will receive in the next year. Right. So if you raise the advance invoice, your revenue will not increase there. It will increase your advance balance part of it. So your revenue will hit in the next financial year. So this would be a part of some compliance and tax management as well in this case, because it is as per the law what we are discussing is. So there are two methods. One is a completed contract method, which I said it is a one-time delivery. You are required to raise the invoice when your service gets completed. And second one is a proportionate completions. When you achieve your milestone, you are required to raise the invoices in that part, right? But just to bring your kind attention that advance receipt is also taxable for the GST. So whatever advance you have received, $5,000 you have received, you have to mention in your GST return that is an advance receipt, on which if you are paying GST in export of services, you have to charge the GST. Otherwise, you can do it with the LUT without charging of the GST. Now, what if you have paid $5,000 GST at the time when you have received the advances, and the final invoice of 10,000 you received in the next month, right? So at the next month, when you issue the final invoices, right, you can set up the advance GST paid on your advance receipt. So you have to pay only 5,000 rupees when you receive when you issue the final invoices. So GST will be discharged in this case in a two manner. One, when you receive the advance. Second one, on the part which you going to receive after the raising of the final invoices. So this is of the accounting part of how to calculate the when to raise the invoices. Second one is calculation of the Forex charges, because when we raise the invoices, the rate would be around 73, and when we receive, the rate would be a different. How we would trade this difference part of it. So Forex accounting, so at the time of the invoice, the spot rate should be considered. And at the time of the receipt, the rate mentioned in your BRC or FIRC would be considered as a part of your receipt. And difference would be either treated as Forex charges, or it would be treated as a Forex gain. I have given the example here. Now, important point is for the receipt pending on the year end. So on say for an example, March ending, I have receipt pending. I have received invoice pending for $10,000, for which I am going to receive the payment in March, in April or May, right? So how to treat the Forex exchange, then in that case, the accounting standard 11 specifically mentioned that you have to recognize the Forex gain and loss considering the balance sheet date spot rate. So 31st of March का जो भी आपका spot rate है, you have to consider that rate and you have to calculate the Forex gain and loss accordingly as on that balance sheet date. And if you have received the payment later on, accordingly to you have to recognize the Forex exchange and gain and loss. Here I have to mention the example to have a smooth understanding part of it. When the invoice is raised for 10,000 USD on 1st March, the rate was 73 rupees. When I have received the part payment of 5,000 USD, rate is rupees 74. So in that case, for 5,000 USD, 1 rupee is my Forex gain, and I have to account Forex gains on the date when I have received that payment. Now, the out of this 10,000, 5,000 is outstanding in my books of accounts as on 31st of March. At that time, the rate is rupees 72. So for this part of 5,000 rupees, I have to book 1 rupee as a loss as of 31st of March. And I have received the balance 5,000 on 10th of April. At that time, rate is rupees 75. Now on March, I have considered this rate of 72. So I have to book the foreign gain with rupees 3, 72 and 75. I have to take the base rate as of 31st of March to accounted for my Forex gain and losses, right? So many a company, what generally they do is whatever the balance lying in the ledger would be traded as either Forex gain and loss, or many a cases they calculate it, but they calculate at the year end part of it. Just based to follow the accounting standards, request to take the habit of calculating the Forex gain and loss as and when you received it, as and when you have to account it for it. And just take a note that you will also consider the Forex gain and loss for the receivable outstanding on 31st of March as well. All right. So when to raise the invoices and how to calculate the Forex gain and loss, that is a second part related to the cross-border transactions we have taken into it. Now let's say the international transactions and P, that is a private equity offers that you got it. International transaction will more or less comes into a picture when you are having an entity, own entity, subsidiary holding or associated out of the India, or in the reverse manner, the out of India company is having a company based out in India and outsourced to you, right? So these are the transactions which fall within the limit of the international transactions, where they says that why the need to arrive this law is that, okay, what if you are not a related person, how much revenue you would have earned by providing services to him? Like say example, A of Bangalore is having his own another company in USA, right? He is charging $10,000 to USA company for the services. What if that USA company is not belong to A himself, but to some other person? Then he might have raised the invoices for $15,000. So here the $5,000 is charging less because of the associated enterprise, right? And that 15,000 rupees which he is charged to some another unrelated party would be an arm length prices, right? So here the taxation would have been done in the terms of the arm length prices, because the government is losing the tax on the part of the $5,000, right? So this is the related to the international transaction prices, where the transaction should have to be on arm length prices, and the various method of arm length prices is given. That is, one is a comparable uncontrolled price is there, resale price method is that, cost plus whatever my cost plus whatever is my margin should be a part of it, profit split method is there, and the transaction net margin method is there. So these are the various method where your consultants would be very helpful to you decide about it, to which method to apply it, and the certification part for the international transactions and other things that you have to mention on a part of it. So these are the transactions related to international transactions. And the private equity, there may be a possibility you got an offer from the foreign company to invest in you, or maybe a merger and an acquisitions. Then the valuations and other parts comes into a picture, at which value you have to you have to issue a shares to your subsidiary or foreign company or interested company, and how the transactions in terms of the compliance with the ROC, compliance with the GST, compliance with the income tax department would be managed, right? So this would cover a part of it, which is a very brief, small brief I have given on a part of it. Next, let's explore together whatever we understand. If you have any concerns or a query, let's explore together and have detailed knowledge of it.
Sure,
Yes,
Mr.
Vikram.
Prasad, I have a lot of questions for you.
Great.
Thanks for all this, but it was a pretty detailed session. I'll possibly take some of the common thematic questions that are coming around. So the first question is, one of our attendees is asking Mr. Prasad, if I get benefits from 44 ADA scheme, can I still claim GST input credit even if all of the income comes from zero rated supply?
Yeah, so there is no such linkage under the section 44 AD and GST. Both are different sections and both are a different act to altogether. So definitely you can take that benefit too, in case if you are following 44 ADA and taking the declaring 50% of your income as a profit, you can definitely take as per my view. There's no bar on that point of it. Very nice question, yeah.
The next question is, if a person has two companies, one in India and another one in US, and he provides services to his US company, would it come under export of services?
Yeah, that would so again I'm making the clear, it is a separate company that you have incorporated or it is a mere branch that you have incorporated. That is the two things to be. If it is a separate company you have incorporated, then it would be treated as an export of services, but international transfer pricing would be applicable in that
I
case
think
too.
it's a virtual office is what he's saying.
It's a virtual offices, then it is not a company there.
I think it's a virtual entity that he has set up.
Yeah, so it is not in a company, so the virtual entity is there, but any person working there, or it's merely a billing that he is using. The previous example we have, previous questions we have, like is a
In case of a
Singaporean.
virtual office, I'm assuming this would be there would not be anybody employed. There would be a virtual office on this one.
Yeah, so it's merely a virtual office, is like they have taken a workspace or they have registered a company there as well.
I'm not sure if it would be registered. There are no employees as such. There's no workspace. There's a virtual entity that they have set up there.
No, it would not be a part of the export of services in that case.
Okay.
The case as explained to us.
Sure. Next question is, I have an LLC registered in US. I offer digital web services globally through my US registered LLC while operating from India. There are two questions linked to it. The first question is, if I remit some funds to my Indian saving accounts quarterly from my US LLC entity, how would I handle GST or income tax on that amount that I bring in back to India? And the second one is, what additional compliances I must follow in India? Do I need to declare my US business here in India as well?
If you are receiving the funds from your US LLC in your personal saving account, it is toward the professional charges to your company, or it is toward the salary that is first to get into a account. And if it is it is like towards your foreign professional services to your LLC, then it would that you should have to register with the GST department. And if you are remitting it as a salary, you are showing it as a part of the salary, then you have to discharge the income tax liability accordingly on that part of it. Right. So that would be the cases in that case.
Sure. Another common question that we are getting is, if from a revenue perspective, people have a mix of international and domestic volumes. Like in this particular case, 70% of volume is coming from exports, whereas 30% from domestic volumes. How would the GST credit work? And can we use 100% or 30% of the domestic turnover credit? Can that be used?
So you can utilize whatever the credit lying with you, but you cannot get the refund for that, right? So for an example, beyond my 70% transaction is from the international client and 30% transaction is from the domestic client, right? Then in that case, I have to cut off the 30% of my input credit. Right. If I go beyond a 30%, there may be a chances you will not get it refund, because department will ask that working from you too. So when department asks a working from you, it means that you are yourself declaring that you are not eligible to take that refund as well.
Got it. Another interesting line of question, Mr. Prasad, that had come in was on the recent kind of a fad as of now, Bitcoin payments. So one of our attendees is saying that they are receiving payments via Bitcoin and they are getting it reimbursed back to INR using one of the platforms. So how would this be treated in this particular income be treated?
The Bitcoin is right now, this payment method is increasing. The people are getting the fund from in Bitcoin and converted into an INR. Guys, it is like as of now, to that my knowledge, government has not established not recognized the Bitcoin as a currency for that. So would to that my accent would not be treated as in a to that my knowledge would not be treated as a forex, because government has not treated it as a part of the currency. So it would not be treated as a forex, would not be treated as a forex, would not be treated as an export of services, and hence you have to pay a GST on that part of it.
Sure. Next question is, we are paying GST under RCM for services of foreign-based companies, example Slack and GoDaddy. Is it possible to take refund on the GST?
Obviously, the services under the RCM, whatever you are paying it, that you can claim as a credit, and you can claim the refund along with the credits too. It is eligible.
Got it. Is soft text compulsory for small amount of exports also? Turnover is around $15,000 per month.
No. Now software is not much of it's compulsory part of it.
But we don't have a lot of time. Possibly I'll be able to take about one or two additional questions. Another question is on limit of transactions beyond which it is mandatory to get registered for GST for exports.
For export, there is no such limit, because if you want to get an interstate transactions, right, you have to take a GST registration. It is a compulsory for a part of it. So there is no such limitation. Yeah, if you want to deal within the state, then there is a limit of 20 lakhs for the services. But if you want to have an export of services or interstate transactions, there is no such limit for the registration. It is compulsory for them.
Sure. Could you also elaborate the difference between FIRC and BRC? Please?
So both are the same. There is nothing but the bank receipt and the foreign inward remittance. This is the just both are the intimations by the bank that we have received that much of the foreign currency from this much of the customers, and we are remitting that much. We are converting this foreign currency and remitting back to you. It both are the same part of it.
Okay. So one of our attendees have an agency, and they I'm working with this client from US. And I receive money in my saving bank account. My client pays in USD and bank charges into INR. My services fall in software consulting, and whenever I received foreign remittance, the bank calls me for the details of payment and services code. And after getting details from them, they credit money in my account and provides me with FIRC GST invoice charging IGST. Do you suggest me to get a GST number or do anything else?
Obviously, you should take a GST number, and their purpose code when you when the service payment is remitted would be a P0802. So it is a software services, and definitely you should get yourself registered with this. It is advisable.
Sure. Possibly I can take two more questions that I have, two last questions. Please share some insights about 6% tax that we have to pay as equalization levy while paying to overseas invoices. What are the limits for them?
So equalization levy is under the Income Tax Act, where you are utilizing the services of a person not having any establishment in India, and if it is toward the advertisement services and other charges for related to the marketing and advertisement, right, then you before the remitting you have to discharge the 6%. You have to deduct, same like the TDS, you have to deduct the 6% and you have to pay for it to the government of India under the equalization levy. And you have to file the annual returns for the same too on a yearly basis, how much you have deducted, how much you have paid, and that registration is payment is compulsory for that part.
Sure. And possibly one final question that I'll be able to take today would be, at what frequency does the LUT need to be applied for?
Every yearly. It is year based.
It's an yearly base.
Yeah.
So, Mr. Prasad, we have a lot of questions coming in even now. What I'll suggest is at the end of this webinar, you will see a feedback form for what was the feedback for the session, and if you would have any improvements that you would want us to bring about. So please share your feedbacks. You would also be able to share your credentials if you would want either the Payoneer team or Untitled team to reach out to you. So you will see that feedback form after once you will close out on the webinar for today. So please share your details if you would want any of our teams to reach out to you. And we would share the credentials with both the teams. In addition to this, we would also upload this video on our YouTube channel, and we will also share this through the CRM campaign. So by next week, that you will find that on our YouTube channel as well. I really hope, considering the kind of questions and the quality of questions that we got for today's session, Mr. Prasad, that it was a very fruitful discussion with our attendees today. And I will really like to thank you for your presence today and taking our attendees through a lot of the common mistakes and the common understanding regards to GST that people come about.
Yeah, thanks, Vikram. And the audience was really very nice and very smart questions that comes to us and that we have deal with in a practical life as well. So this is really helpful. And thanks the audience and the team Payoneer.
Thank you a lot, and thank you for all of you for joining in today. As mentioned, I'll share the YouTube link for the video as well. We'll host it on our Payoneer channel, and you will be able to see if you would have missed any part of today's session, you'll be able to see it as well there. So thank you for joining in. I hope it was a fruitful session for all of you. Thank you.
Okay. Thank you. Thanks.